Hello, nice to meet you. This is Dr. Kim from Richgo. It feels like we're being hit hard. The economic growth rate isn't the only concern. Exchange rates, interest rates, and prices are all in a state of emergency right now. What is the current interest rate trend? If the interest rate goes up, real estate will get better. Guys, this is really an interest rate trend. Interest rates, inflation, everything is at an emergency rate right now. You really need to wake up from this dream. Current situation is not easy at all.
Hello, nice to meet you. This is Dr. Kim from Richgo.
Hello, this is Lee Ki-hyun from Richgo.
Recently, the IMF and major institutions have issued warnings. The South Korean economy is in big trouble. It's a crisis. That's what I said. I'd like to discuss what the current state of the South Korean economy is like.
It seems like the warnings are getting stronger and stronger. The IMF predicts that next year, South Korea's economic growth rate will be around 2%. It might even be less than 2%. We're talking about this, and the problem is that it dropped by 0.2 in just a month. It was originally 2.2.
That's right. It was like that last time we broadcasted, but they lowered it again.
If this trend continues, it really seems like we might barely hit 1%. Right now, the downside risks are really significant. We're talking about this right now. So, let's take a closer look at what this is all about. This is the change in the IMF's outlook for the South Korean economy. So if you look at January, April, July, and October of this year, how is it looking? 2024 so far. Is it okay? So a little bit, it went up. But now, in November, the economic growth forecast for 2024 is at 2.2%. And the important thing is next year, right? So back in January, they said that South Korea's economy would grow by about 2.3% next year. But then they started to lower it little by little, and by October it was down to 2.2%. Now, just a month later, it's dropped to 2.0%. I can't even imagine what they'll say in December or in January and February of next year.
It's just a forecast. But after Trump was elected, the South Korean stock market reacted immediately. It's because they haven't really committed to anything or made any clear statements. Just seeing that precarious situation makes me a bit uneasy.
So the reason for this is that South Korea is going to take the second biggest hit after China. That's because the trade conflict between the US and China has started. And while China will take the biggest hit, South Korea will be next. Why? South Korea trades a lot with China. So, there's no way we won't be significantly affected by the trade divide. And what else is there? There's also the issue of government debt, along with problems like aging and declining productivity. In short, there just aren't any young people who can support the South Korean economy in the future. Given this situation, it seems that the warnings about South Korea are becoming increasingly strong.
China is already taking a hit. And after that, our country is going to get hit hard too.
So in the case of China, if the US slaps on huge tariffs, it's like saying 60% of their production is going to die. They have to sell those goods somewhere, right? So if they start dumping products at really low prices to kill the market, what will happen to South Korea? We're already struggling as it is. And if China decides to completely reshape the market and just go for a dumping strategy, that could definitely happen. So it seems like these aspects are really putting a red flag on South Korea's current economic situation. Next, what are the media saying? In this report about Trumpnomics 2.0 and the South Korean economy, it discusses what would happen if Trump starts a second round of the trade war. If the US imposes a 60% tariff on Chinese products, then South Korea's economic growth rate will drop by 0.46. Then, on top of that, China also imposes a 60% tariff on US products. Then it would be an additional 0.49. Then, if the US imposes a 10% tariff on products from other countries, then it would be 0.57. Then, products from other countries that are made in the US. Why? Are our products really that? Then I can do the same to the US. That could definitely happen. That's right. So that would be a drop of 0.62%. Then, if we apply a 10% tariff on all other trade, it would be a total drop of 1.14%. So right now, the scenario shows that there are no good outcomes And the pressure on our country's economic growth rate is expected to fall by at least between 0.5 and 1.1.
It's certain that it's going to drop. And the only question is, by how much? That's right.
So, I believe the IMF's revision from 2.2 to 2.0 in just a month is due to these influences. If we take 2.1 as a baseline and it drops between 0.5 and 1.1, then it would fall to between 1.7 and 1.1. South Korea's economic growth rate. Of course, if that happens, it would have quite a negative impact on South Korea's stock and real estate markets.
The exchange rate definitely hit 400. Right. How much will it go up to in the future, like 1,400? Is it 1,450? They say that if it gets stuck there, it's really dangerous.
It's really dangerous. So right now, it's not just the economic growth rate that's in a state of emergency, but also the exchange rate, interest rates, and prices. And what's the problem with the exchange rate? As the exchange rate rises and these tariffs become a reality, so will import prices go up? Isn't it going to go up?
It go up.
It will go up. So, when the exchange rate goes up, we import various things from overseas.
We have to buy higher price.
Food and energy are the most important things. South Korea has a very high dependency on imports for these. And if the exchange rate goes up, it means we have to pay more Korean won to buy them, right? So of course prices have to go up, right? It will go up. So everyone, right now, we're in a trend of lowering interest rates. With interest rates going down, the real estate market is going to get better. You guys really have to wake up from this dream. The current situation is not that easy. It's really a dangerous situation right now. Right now, the exchange rate is really precarious. Just take a look. The exchange rate soared during the IMF crisis, spiked in the dot-com bubble, and rose with interest rate hikes. Recently, it spiked again. Now, both lows and highs are rising. The rate is fluctuating upwards, which could be dangerous during the Trump era. Is there a reason this rise shouldn't happen? It's ironic because past rises were justified by crises. Now, it's just because Trump was elected. South Korea had already started seeing a population decline, affecting the market and businesses.
But it's a bit ironic that back then there were issues that justified the rise in the exchange rate.
The financial crisis, foreign issues, and the IMF crisis were all significant. But now, it's just that Trump got elected. However, even before that, South Korea had already started to see a decline in its population, and various factors are affecting the domestic market, small businesses, and even large corporations. It's all tough, isn't it? The auction is at an all-time high. So, the fundamentals of the Korean economy are completely broken right now, and it's like being hit with a fatal blow or a club. So right now the exchange rate is in a very unstable situation, and I really can't imagine how high it could bounce.
If the exchange rate surpasses 1,401 and stabilizes, how should we interpret that?
That means the value of the Korean won has completely weakened, and that will lead to rising prices. Prices are going to go up. So, the prices of imported goods are going to rise, but could have a positive impact on exports. Exporting companies can receive the same amount in dollars, but when they convert it to Korean won, they'll get more won. But there's another issue here. By the way, I have a book written by someone I really respect and admire, Director Park Jong-won of the Knowledge Economy Research Institute. The Era of Trump 2.0, you all should definitely read this book. I've read it all too. Make sure to read it, and I highly recommend it. So, what our reporter Park Jong-woo mentioned is this. So now, in the Biden era, where have South Korea's big companies built their factories? They built them in the US. In the US, semiconductors and secondary batteries. Secondary batteries. Yeah, semiconductors, secondary batteries, and so on. They gave their factories to the US. And today, I saw in the breaking news earlier that a certain company is planning to build factories in the US and Europe with an investment of $800 billion. But the problem is, what happens if the factories are built not in Korea, but in the US, Europe, or overseas? First of all, what happens to jobs in Korea?
It's decreasing.
If they had built the factories in Korea, then Korean people would have had jobs there. But building factories overseas means that jobs in Korea are disappearing, which is a huge blow to the South Korean economy. And what's the other problem? If they had built the factory in Korea and sold the products by delivering them from Korea, they would have received dollars and exchanged them. So they would exchange it. As the demand for the South Korean won increases, it helps stabilize the exchange rate. Where did they give the factories? They gave it to the United States. So do they really have to exchange that money into Korean won? There's no need for that. So now the flow of things has changed compared to the past. So what is it? It's very likely that the exchange rate won't stabilize and will keep rising. So, if you look here, just looking at the drop in the value of major currencies against the dollar after the US presidential election, you can easily see which countries are the most anxious. Do you see it? Korea and the euro. What is this place? The drop is largest. In other words, the exchange rate has risen the most. Right now, Korea is in a really dangerous situation. So now the export side is really tough, and the domestic market is facing a situation that has never happened in history. What this means is that consumption has decreased for 10 consecutive quarters. Consumption. 10 quarters is about 2.5 years. It's been getting worse for the past 2.5 years. It's just going downhill continuously.
I wish to see it. Don't have any money to spend.
No.
Don't have money.
I feel the same way. That's right. I really don't have any money to spend. But let's take a look at how serious this situation really is. Having 10 consecutive quarters is something we can compare to past crises in Korea, like the IMF crisis, credit card crisis, and the interest rate crisis. Back during the IMF, consumption only decreased for 4 consecutive quarters. After that, went up. Consumption has increased. Then during the credit card crisis, consumption also decreased for 4 consecutive quarters and then stopped. During the financial crisis, consumption only decreased for 2 quarters, just half a year. But how is it now?
Seriously? It's serious, really serious. No, it's seriously.
It really serious. A lot of people saying that it's a situation that's even more serious than the IMF. That's right. Everyone, it's more than twice as serious now compared to the IMF. It's a really serious situation right now. I have no intention of causing any anxiety or anything like that. The important thing is that this is all fact. Fact. Do you really think this is rock bottom, everyone? Everyone wants to live with hope. We need to face reality and be prepared. If you have high hopes, you could be in real trouble. We really need to look at reality very coldly and be prepared. So, what I recently changed my Kakao Talk profile to is prepare like a pessimist, dream like an optimist. This is how I changed my Kakao Talk profile. Really, everyone, now is the time to prepare like a pessimist. This is how I changed my Kakao Talk profile. Really, everyone, now is time to prepare like a pessimist.
Why am I writing this down? It feels like I'm writing a quote without even realizing it. Prepare like a pessimist, dream like an optimist. I wrote that down without even thinking. Today, since the economic situation isn't great, the topics we're discussing might be a bit dark, but we're not pessimists. We're tackling these subjects to become optimists who can dream. So, shall we wrap up and conclude today's broadcast?
Right now, the South Korean economy was already in a precarious situation, and Trump's election was fatal blow. As a result, the IMF's growth rate forecast for the South Korean economy keeps getting downgraded, and in 2025, we might see growth in the 1% range. And people really don't have any money to spend right now. There's no money to spend, but the real estate prices are going up. Is it going to rise in 2025? Is it because there's no supply of new apartments? Really? A lot of people fall into bias. I'm just seeing what I want to see. Because I have an incentive on real estate. So I hope it goes up. But everyone, to look around you. Look around you and really take a cold, hard look at several important indicators. It's really dangerous. And if the dollar settles at 14.21, 14.31, and goes up from there, yes, it's a really dangerous signal. Everyone, about 14.31. It's a really dangerous signal. And the government has artificially propped up the real estate market. But I find this really unfortunate because the country's granary is currently in a situation where it's leaking. What if real estate drops a bit? They say that when real estate prices go up, jobs will increase significantly. The country's competitiveness proves. Why increase it further? Using this money for Korean factories and jobs would boost the economy. If we use this money to build factories in Korea and create jobs, the Korean economy will become much stronger. I'm really sad that all we're doing is propping up the real estate market. And what is this? No matter how much the government tries to prop things up, they don't even have the energy to do so anymore. But you should really keep in mind that these completely abnormal real estate prices have no choice but to return to normal levels.
Yes, I understand. The IMF has issued a warning. It seems that the Korean economy is in a crisis as you warned, but as you said, we need to prepare in advance, like pessimists. I think it's time to prepare like optimists. I'll wrap up today's video here. Thank you.